Okay, folks, so we are joined today from the States by Jordan Roy-Byrne, editor and publisher of the Daily Gold Premium. Jordan looks at both technical analysis and the fundamentals of the precious, yellow and white metals, in addition to stocks. His work has been featured on CNBC, Barron's, Financial Times Alphaville, Kitco and Yahoo Finance. Jordan, glad you could make it.
Thank you so much for having me. It's my pleasure to be on with you today.
Well, it's great to have you here, an expert in gold. Now, the precious yellow has made or been known for many centuries as something of a safe haven asset class. Do you think that the proliferation of cryptocurrencies such as Bitcoin now rival gold amid global financial crisis?
I actually don't think so. I know that a lot of people in the gold world last year, when cryptocurrencies and Bitcoin really took off and started going vertical, or even before that, when they were just rising and trending higher nicely, a lot of people in the gold world were worried that it might be overtaking gold, and this is why gold is not performing better. I don't think so. I don't think it really matters. I know we'll get into the fundamentals, but even last year, I don't think gold's fundamentals were that great, to be honest. So I never felt that Bitcoin was stealing gold's thunder, so to speak. So, and at this point, I mean, we've seen the cryptocurrencies crash and burn basically, and who knows if they're going to go all the way down to zero or recover at some point. I mean, that's for somebody else to say. I really don't know. I have my opinion, but it's probably not worth that much right now. So, with respect to Bitcoin, I think it really doesn't impact gold whatsoever.
Well, that's music to many gold and silver investors' ears, I'm sure, because for a brief moment before Christmas, when Bitcoin hit $20,000 a coin, even I was beginning to wonder. But then we had the seasonal rally that kicked in for gold, which, of course, made me very happy, and I'm sure you too. So we're at a very interesting impasse for the US dollar and too for gold. I mean, the IMF has officially greenlighted the acceptance of the Chinese yuan into the IMF's foreign exchange basket, potentially threatening to dethrone the US dollar as the world's reserve currency. And it would be interesting to know that the US dollar has indeed fallen in value by 95% since the inception of the Federal Reserve. Hyperinflation in disguise, and that has been obfuscated in part by the CPA lie. We all know that the Federal Reserve is printing more and more money and is no longer able to disclose how much money they're actually printing via the M3 report. We've got unsustainable government debt. Fiat currency has an average lifespan of 40 years. Global currencies have collapsed on average every 80 years, or global reserve currencies, should I say. Do you think all this combined is the perfect storm for gold, short, medium, and long term?
I would probably say in the long term. I mean, a lot of those things that you mentioned, they just don't impact gold in the immediate term. That the real driving force for gold in most cases is real interest rates, and especially when they're below 2%, or when they're below 2%. Because if we think of gold as a currency, which it is, I mean, JP Morgan said gold is money, nothing else. If we think of gold as money, basically, or as a currency, then it's obviously competing with the dollar, or where you are, the pound sterling, and if you're somewhere else in Europe, the euro. And so what really matters is real interest rates, and gold tends to be inversely correlated, because if someone or a fund manager wants to keep a lot of the money that they have, the cash, in the bank or a short-term bond or a CD, if they can earn a real rate of return on that money, in other words, if they can earn a return that's positive when you adjust for inflation, that's negative for gold. So if inflation is only 2 or 3%, which we know it's much higher than that, but if inflation is 2 or 3% and interest rates are 5 and 6%, then that's negative for gold, because you can put your money into one of those, into a CD, into the bank, into a short-term bond, and you're earning a real rate of return. Now, if it's going the other way, and real interest rates are going negative, then that's positive for gold, because you're not earning a real rate of return on your money. And so that is favorable for an alternative currency like gold, even though gold is really the ultimate currency in the very, very long run. That's not how markets work. I mean, markets really work in the short run and what's going on now. And so that's what people allocate, fund managers, what they allocate to what's going on here and now, what's going on immediately. So as far as, the reserve currency, I mean, those are great statistics that you mentioned. But we're not, I think you said the average was 80 years. We're still several decades away from that. I mean, it may happen sooner than 80 years this time. But so those things you mentioned, they're not driving gold in the immediate sense. I mean, ultimately, yes, they will drive gold, and gold will have to go much higher. But they don't really impact gold, over the next year or two.
No, of course. I mean, everyone has different time frames, short, medium, and long term. But people also have very short memories when it comes to, obviously, look at the 2008 credit crunch, and you look at the banks and institutions doing exactly the same as what originally got them into the difficulty that the governments around the world, certainly the US government and the UK government, had bailed them out on. So, I mean, since gold spiking in 2011 and its gradual decline over the last 7 years, which I guess has been until recently, exacerbated by the increase in interest rates, what do you consider to be the main catalyst for gold to move up?
I just lost you for a second. Can you repeat that?
Oh, no problem. I mean, since gold spiking in 2011 and its gradual decline over the past 7 years, which I guess has been exacerbated by increasing interest rates, what do you consider to be the main kind of flashpoints over the next couple, 2, 3, 4, maybe even 5 years for gold to have a bullish reversal and move to the upside?
That's a great question. Well, I mean, if we think about the fundamentals, negative or falling real interest rates, you either need interest rates going much lower or inflation going much higher. Now, given where interest rates are, it's probably going to be an acceleration in inflation. That's the more likely of the two over the next several years. However, over the next year or so, I mean, I've done a lot of historical research, and most of the time, and I looked at gold stocks because, as we know, the gold price was fixed until 1971. So I went back 60 years and looked at a variety of Fed cycles. And what I found is that, interestingly, gold stocks tend to have very significant bottoms most of the time when the Fed is done hiking rates, when the Fed funds rate peaks. I noticed that 10 out of 12 times in the last 60 years, when that happened, gold stocks rallied a minimum of 55%, an average of 185%. And that the move tends to begin an average of 1 month or a median of 2 months after the Fed funds rate peaked. So, in other words, I think the next catalyst is when the Fed stops hiking rates. Now, obviously, it's hard to predict, to the month or to the week when that's going to happen. But I think, I think most of us can anticipate that. I think it's going to be at some point next year, maybe around the middle, maybe a little bit before, maybe a little bit after. Again, I don't have a crystal ball. Nobody else does, so we don't know. But I'm quite confident that when the Fed is done hiking rates with this cycle, we're going to see precious metals at least have a big bounce. Now, if they just pause for like 6 months or so, you're only going to get a rally. You're not going to get a real bull market. But if they stop and then they signal that they actually want to do a few cuts, I think that could trigger a major move higher in precious metals. So that's really what I'm looking for here and now. I think that's going to be the next immediate catalyst as we move forward.
Okay, well, I mean, they've started, certainly the Bank of England and the Federal Reserve have been increasing interest rates steadily. But I mean, do you think that gold and silver have further to go down before they ultimately go up? Or do you think that it will continue sideways into 2019?
I think it's more likely that they're going to continue to go down. I mean, we're seeing in the last couple of weeks, I mean, we've seen the market get extremely oversold, and this rally has basically failed. The gold stocks, today they're down a little bit, but yesterday they broke their August low, so they broke to a new low. The same thing happened in silver. It did not happen in gold. And I mean, when you're in a primary downtrend, this happens quite a bit, where on the downside, we see silver and the gold stocks are outperforming gold to the downside. So those markets already made new lows, while gold hasn't. Gold isn't that close. It would have to drop another $30 or so before before it makes a new low. But I do think that we're probably here at the beginning of September. I do think after a little bit more weakness, we could finally see a good rally for a month or two, a good oversold rally in this sector. But I still think that we're probably going to see lower levels in the metals. And gold, I still think could fall into the $1,000. I mean, I don't know if it's again, I don't have a crystal ball, but my own opinion is we could see it bottom around $1,000 this time. And when we look at what the gold stocks and silver have done, they tend to be a leading indicator for gold, and so they're underperforming so badly. And again, that happens when you're in this kind of a downtrend. But the fact that they've already broken to new lows, silver itself is not that far from its late 2015 low. So those markets are telling us that gold is probably going to end up trading lower in the months ahead. So I don't think we're that close to a significant bottom in precious metals. Again, but looking at the technicals on gold, it does tend to line up with my thinking that the Fed is probably going to stop hiking rates at some point around the middle of next year. So precious metals, we should keep an eye on them, obviously, but it's in my opinion, it's still too early to think that we're going to have this massive bottom right now. But again, in the short term, I think we're getting so oversold that we're kind of setting up here we could see a good bounce for a month or two or even a couple months.
Well, great. I mean, gold historically does very well around about Christmas time. I don't know if you look at the seasonals, but from mid-December onwards to spring, typically gold has done very well indeed. And that has been seen historically. But you talk about the psychological level of $1,000 an ounce, and that could, well, certainly from our analysis as well, see a potential bull rally. But with silver, of course, it mimics gold's movements, and it's said to be gold on steroids, with it emphasizing whatever gold does, but in a far more aggressive fashion. What do you think of the argument that one day silver could be more valuable than gold, given that it's industrially in demand too?
Normally I have an answer for everything, but that I do not. I really don't know. You'd have to ask somebody else. I mean, that's so hard to predict. I mean, the gold is, I mean, we're, I think, over 80 times on the gold-silver ratio. So I would be really surprised if that happens in any of our lifetimes.
It's a bold claim, obviously. It's a very bold claim. But, I mean, it does have more industrial use than gold, for sure. And as you mentioned, the gold-silver ratio, it is about 84 at the moment, and 84 ounces of silver required to buy 1 ounce of gold. But given that silver is comparatively cheap compared to gold, would silver investors do well from just swapping into gold if, say, the ratio falls to a far lower level at some point in the future, say 40 to 1?
Yeah, I mean, I definitely could see that happening. If gold over the next couple of years, if we see a major significant bottom and we see gold is able to rally, let's say back above 1,500 or 1,550, where there's a lot of strong long-term technical resistance. If gold does that, then you're probably going to see a much bigger rebound in silver. So, but it's a question of timing, because if you do it, if you're going to make that swap, and you do it you could do it too soon or too late, then obviously you won't you might find yourself in the red for a little while before things turn around, or you just might not do it at the right price. So timing is so important with that. But it's very interesting because silver peaked about 5 or 6 months before gold did in 2011, and now we see silver is very close to retesting that late 2015 low, and it looks like, I mean, it's way ahead of gold to the downside as far as that. So it's possible that silver could be, normally gold leads silver, and then after gold gets going, silver really takes off and outperforms. But just to throw it out there, maybe this time, maybe silver is going to bottom first and lead gold in the next bull run. I don't know, but I think it's worth thinking about for investors, because again, in 2011 it peaked 5 or 6 months before gold did, and now we see it looks like it's going to test its low several months before gold does. So keep an eye on silver as a potential leading indicator, even though normally it isn't.
Okay, that's very interesting. I mean, it would seem that silver is certainly more accessible for your average investor who wants exposure to precious metals, given that it's cost far less per troy ounce compared to gold. But I mean, what advice would you give private investors? I mean, it's common sense that everyone should have some form of exposure to precious metals as part of a sensible, well-balanced portfolio. What advice would you give them? Would you say buy bullion and stash it under the mattress? Would you say buy an ETF?
I would say buy an ETF because I look at precious. I mean, you have to look at something that's an insurance position. And if precious metals, I mean, they are good financial insurance. But if it's insurance, then it's not in your investment portfolio. I mean, those are two different things. But I know that you could, excuse me, I know that you could say, well, you know, I have 3% insurance position in my portfolio. That's fine. But I think that buying bullion is insurance and not really an investment. If it's an investment position, just use the ETFs. If you want financial insurance, then just buy a tiny amount, something that you can afford of gold and silver every month. And then you can, you know, you'll obviously have a bigger insurance position over time. So that's how I would, you have to think about what's an investment versus what's insurance.
Okay, that's a very good distinction. So you're simply asserting that an investment is where you can realize the percentage gain, like buy an ETF, for example, and you can easily transition in and out of it, versus insurance, which is literally having gold bars or silver bars under the floorboards if the world goes to hell in a handbasket.
Yes, but I mean, if that happens, you also need a stash of food, probably.
Put the gold, silver bars by the tins of baked beans and tin tomatoes.
And in that scenario, it's probably better to have silver coins because gold is so much more valuable.
Mm. Yeah,
I mean, I don't think we're going to get to that point, but just, I mean, it's fun to talk about in theory, but you know, a silver coin would probably be. You know, someone can't get with a gold coin. It's worth too much. So if you're trying to buy a loaf of bread or whatever, it's probably going to be too much money. So silver coins would probably work better if you actually think we're going to get to the stage where you have to use those to buy food and other essentials.
I see. So people who may just want to buy a Fort Knox style kind of kilo bars may just want to go to a smaller kind of amount so that it is portable and people can accept it and give change.
Right.
And it just seems more sensible. Okay, fantastic. So there we have it. So for people who want to find out more about you, Jordan, where can they find you?
They can go to my website at thedailygold.com. I produce a lot of free information, so you can go there, and I have editorials and videos, and I post interviews like this one.
Fantastic. Okay, Jordan, well, thank you so much for your time. It's been a pleasure having you.
Thank you so much for having me. I really appreciate it, and I really enjoyed it.